Like us humans, the market can feel emotions. It can feel confident, optimistic, hopeful. At the same time, it can be fearful, nervous, insecure. But how do we understand this and how can we use this in our trading? Let's talk about that. Hello there, this is James, and you're watching Trading Bites. As you know by now, Trading Bites is an introduction to the market. Later down the line, the other courses you will be doing, like the Trading School and Trade Master, we go into a lot more detail. But in Trading Bites, we just give you a little bite-sized piece. Today, I want to talk about market sentiment and what that is. But before we get into all of that, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With it out of the way, let's get started. So what is market sentiment? Market sentiment, as well as what's known as investors' sentiment, basically describes how the market is feeling. Because as you know, the main people in the market obviously are humans, and humans have emotions, and these emotions also dictate where the market may be going or how the market is feeling. And this is what market sentiment is. Now, the market can either be feeling optimistic, confident, full of itself, and that is what's known as a bull market. And the reason why it's called a bull market is because there is more bulls dictating the direction of the market. So in a bull market, an asset, or the market in general, is on a way up, is on an uptrend. The other side of the coin, of course, is when the market is feeling fearful, anxious, nervous, pessimistic. This is called a bear market. This is when there is more bears in the market dictating play. So that means it could be either an asset or the market in general, means the asset is under pressure heading down, or the market in general is feeling down. So it's all about how the market is feeling. Now, market sentiment is not necessarily dictated by fundamental analysis. It can be in some ways, and fundamental analysis can, be a very powerful part of how the market is feeling, but it's also technical as well. And it's important to know market sentiment and how the market is feeling when you're making trading decisions. Because if you're feeling optimistic and confident, the market may not be, and the market is far bigger than you. So it's important to engage how the market is feeling. What the general market sentiment is. So it's extremely important to know this. And there is so many actual real cases of when market sentiment is dictated play over a number of factors. I can give you an example. Back in December 2018. The market got spooked, got scared, got fearful because the earning reports coming in from major companies were a lot less than expected in general. And this spooked and scared the market. Scared the market because I started looking and going, hang on, this is not very good. At the time, the market was really bullish. The S&P 500 was doing really, really well. But when the earnings reports from these companies started coming in, the market started getting a little bit anxious and started putting pressure on it. At the same time, Jerome Powell, who was, is the Fed chair and still is currently, time of recording, the Fed chair, he spooked the market by ignoring the general market concerns, and he came across quite hawkish in his statements, which spooked the market even further. What happened then? You had a bear market rally. bear market rally is when the bears basically take over the market, and you hear a huge sell-off. So stocks, equities, currency, risky currencies started coming under horrendous pressure. And in fact, by the end of December, the S&P 500 back in 2018 had the quickest or fastest drop since 1931. So this is how knowing important market sentiment is, because it can suddenly change like that. So you need to engage it. I can give you another example, more recent example of market sentiment, which can change literally like that, and where you need to be aware of. And this is a case of this is more recent. This is back in 2022. Okay, 2022, when the UK, and this has only affected one currency in particular. Anyway, the UK elected a new Prime Minister, Liz Truss, and she came in with her new Chancellor with new sort of tax cuts, and hoping this will win over the voters. But this scared the market dramatically scared the market, because the market sentiment will tell you in reality what certain incidents politicians will do, and their behavior will show you that this is not a good idea. The tax cuts was not a good idea. So the market absolutely went haywire, and the sterling, the British pound against the US dollar, came under humongous pressure. Overnight, it became a real bearish asset. The bears totally took over. All the cable traders was the British pound, US dollar, was dictated by the decision by the bears. So it came under horrendous pressure. So how do you keep in touch? Or how do you read market sentiment? Like I said, there is a part of fundamental analysis in market sentiment, but it's also at the same time, like I said, with the Liz Truss example just then, it can sort of happen quite quickly, change in mood quite quickly. So this is where you need to sort of be in touch with, making sure you're up to date with the news, what the story is, what's being discussed, what's, what the chat or the word and the rumors of the market is. So you need to be aware of that, because we all knew, using the Liz Truss example with the sterling, we all knew at the time, because I was very active back then, and we all knew at the time that there was rumors of these tax cuts. We all knew it was not a good idea, and basically the rumor went to spread around, this is going to be bad. If she does announce it, it's going to be bad. So keeping into touch with the news and what's being said, what's being talked about, and you can do that obviously Bloomberg, my live channels as well, and other financial news. So keep in touch with that. But there is another way, several other ways of engaging market sentiment, and that is by using technical indicators. Now, one of the most popular, and this is actually a tradable asset, but one of the most looked at indicator / asset to indicate how the market is feeling is what's known as the VIX, which is also known as the fear index. Now, what the VIX does, or what the instrument does, it calculates the number of put options being bought against the S&P 500. For those of you who are not familiar with options, there's two types of options. There's a call option and there's a put option. People buy call options when they think the market's going up, and people buy put options when they think the market's going down. And the VIX calculates how many put options are being bought against the S&P 500. Now, if there is more put options being bought against the S&P 500, that indicates there is more bears in the market believing the S&P 500 is going to go down. And if that's the case, then the VIX goes higher to a certain level. When it's at a certain level, people go, right, we're looking at potentially a bear market. So that's one way of keeping up to date with market sentiment, by using indicators. The other way, there's the high-low index, which you can use. But one of the most popular, and again, we'll do a course on this in more detail in the trading school, is moving averages. okay, or using 2 moving averages. Now, there is 2 expressions with moving averages when it dictates the market sentiment. There's the golden cross. Now, again, don't panic. I will go in a lot more detail, but a golden cross, okay, is when you have a smaller moving average, okay, crossover a longer. How can I do this? So you got a smaller moving average crossing above a longer moving average. It's called a golden cross. That indicates that the market sentiment has changed and it's becoming bullish. And then you have what's known as the death cross. This is again when you have smaller moving average crosses below a longer moving average, indicating that there is now bearish sentiment in the market. So you can use that. So you can use that indicator as well. But as well as using that, there is another indicator called bull power, bear power, bear power as well. And it's easy for me to say, which is another indicator to use. And there is a couple more, which of course we'll go in a lot more detail. But that's how you keep on top of market sentiment. And it's very important to know, because it's good to know, like I said earlier on in this video, despite what you think, the market's a lot bigger than you. So even though you might be feeling one way, the market may not. So it's a good idea to keep on touch of how the market is feeling. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand for entering any trade. Till next time, every single one of you, trade safe.